Hey, how's it going, guys? Thank you for joining me on this week's episode of The Real Deal. And today we're talking about a very hot topic. And it's been all over the news, all over our news feeds. And it's about, the new law that passed through the government that's designed to help people that are affected by COVID-19. There's a lot that goes into this, and there's a lot of different facets to this, unemployment and a bunch of different stuff that's there to help people that are affected by this. I'm going to, of course, focus on the real estate side, and I'm just going to go over some of the topics when it comes to the mortgage forbearance. That's exactly it. That's part of like the title right there, mortgage forbearance. That's kind of the biggest thing. I want to make sure that people are informed on the process and what exactly that means, because a lot of people are under the assumption that you can just simply not pay your mortgage and it'll be forgiven, and that that money just goes away. Unfortunately, that's not the case when it comes to mortgages. So what the government did is for government-backed loans, and that's another part, and we'll go into that. But for the most part, what that means is, if you're going through, financial hardship, you lost your job, you've been laid off, hours have been cut, you can't afford to pay your mortgage anymore, right? Well, they have passed a law where it basically allows you for government-backed loans to go as far as skipping up to 12 months, which is insane, right? That's a ton of, space and time. And that's a great thing. If you need to take advantage of it, please do take advantage of these resources that are available to you. Take advantage of it, and obviously make sure that you and your family are okay. However, you want to make sure that you make a smart decision and you make that the last resort. Whenever you don't make these payments, that money is going to have to be repaid. Now, different lenders and different servicers are going to have a zillion ways of having that taken care of, right? But I'll just go I'll go over a couple of those. One of those could be like, let's say you take just 3 months, right? What if you just do the 3 month option where you're like, hey, I'm just not going to pay anything for 3 months. During those 3 months, during that time frame, you're not going to have any late fees. You're not going to have any penalties, and it's also not going to report on your credit. So there is that upside to it. There is a plus side to you in this particular time, is that isn't going to affect your credit negatively, which is a good thing, obviously. But those 3 months are the months that you skip your payments. If you do a short-term one, maybe they'll say, hey, you know what? After you're done, you're going to have to pay this back spread over 6 months, or you're going to have to pay this back spread over 12 months. So if your monthly payment is $1,200 a month, and, you skip 3 months, that's $3,600. Maybe for the following year, they're going to say, hey, your monthly payment's going to go up $300 a month. So obviously that's one of the ways. Another way is they might roll it into your loan. So let's say you miss, 3 months, or let's say you miss 12 months, that could be a lot of money that you're adding into your loan, into the equity. So with mortgages, it's not the same with cars. I have a sister that has a loan through Desert Financial, and they just openly said, hey, you know what? We're going to let you skip 2 months. We're just going to add it to the back of your loan. With the car, it's like, okay, that's cool, and they just did it. Desert Financial, kudos to you guys for doing that. That's awesome. For no reason at all. She just got the email. She didn't even apply for it. But with mortgages, there is, once that gets added to your loan, obviously if you were thinking about selling in the next couple of years, you've decreased your potential equity by that amount. And it's the exact monthly payment that you would be paying. So if you're paying $1,200 a month, $1,500 a month, just multiply that, add that up. And that's best case scenario. If they allow you to roll that into your loan, that is best case scenario, because not all mortgage servicers are going to allow that. Some of them might do the breaking up your monthly payments and paying it back that way, which obviously that's going to suck, because then, after you're done and after we're all done with this, this situation, this pandemic, then your monthly payments are going to be super high, right? So you want to make sure that you're only using that option unless you absolutely have to. You want to make sure that, it's your last resort. There's other stuff out there that you don't have to repay, right? Obviously, if you're unemployed and you're collecting unemployment benefits, you won't have to repay some of that stuff. Like, take advantage of whatever you can, but do make this mortgage part one of your last resorts, because the banks always get their money back. They will get that money back either by increasing your monthly payments, or by adding it to your loan, doing a loan modification, doing a refinance. It's just something that you want to avoid if you can, I mean. But of course, please use it to your benefit if you can. And that's a part where it gets kind of gray. So it's going to depend if your loan is government backed, right? So If you're FHA, guaranteed to be government backed. There's two other big ones, Fannie and Freddie. A lot of loans, I would say like 95% of the loans that go through my hands are Fannie and Freddie and FHA. So I know for sure that most of my clients are okay. But just to be 100% sure, if you are going through financial hardship and you need to skip some monthly payments because you've been laid off, you've missed some hours, there's this really good website that I came across that I'm going to direct you guys to here shortly. And so it's Investopedia. One second. So if you guys need the link, please let me know. Send me a message, and then I'll copy and paste this link and send it to you. But I just want to show you where you look to find out if your loan is considered a government-backed loan. Now, if it's not a government-backed loan, there's a lot of servicers. There's a lot of state-specific things that are happening where a lot of mortgage companies and servicers are going on board. So if you end up not being a government-backed loan, don't get discouraged if you're going through financial hardship. So if you keep scrolling down, there's going to be a couple hot, bullet points. It talks about, what exactly forbearance is. Now, this only quotes 180 days, but I know for sure when I went to the Fannie and Freddie websites, they go all the way up to 12 months. But it specifically tells you, it gives you some good guidelines. This is actually a pretty good resource. Good job, Investopedia.com. But there's going to be a section right here that says how to find out if your loan is federally backed. And there's going to be two main links. Now, like I said, if it's FHA or VA, I guarantee it's a federally backed loan. But if it's not FHA or VA, if you purchased your house through conventional financing, this link right here, this section right there is a great one because it's going to give you, you just go to the website, and then you just plug in your information, first name, last name, street address, city, state, zip, last for your social, and then it'll tell you if your loan is a government-backed loan. So hopefully it gives you guys a little bit of insight on what that looks like. Like I said, if you are, of course, forced to go through this process and skipping a couple mortgage payments, please just make a smart decision. Just understand that that money will be paid back one way or another. The benefit that you do have, of course, is that during the time frame that you're not making these monthly payments, you're not going to have to, you're not going to have any late fees. You're not going to have any penalties. It's not going to report negatively on your credit. But that's going to be a whole nother mess too. I mean, whenever you have, let's say your credit, right? It's not going to report negative on your credit, but there is going to be a gap in payments where you didn't pay. And everything sounds really great right now, but when it comes down to it and you're thinking about buying something down the road, that could definitely affect you too. So just make sure you have all the information that you have and use that as a last resort. And of course, if you are affected by it, please take advantage of those options that are available to you. And if you guys want me to send you that link that I was just going through right now, go ahead and just send me a message and then I'll copy and paste it right over to you guys. All right. Hope you guys have a great rest of your day. Take care and have a good one.